Okay, hi there, traders, and welcome to Trade the Structure. So we're going to go over some key charts today, mainly the dailies, and we're going to go over some 30-minute charts just for some currencies and the dollar index and a few other things. So firstly, we're going to be looking at the indices, the US indices, and we'll go over to the European and the Asian markets, and just see what's happening. We're going to look at obviously the key levels, where we expect some action, because the markets have bounced quite well of late. Okay, all led basically higher by the US, but now what I'm sort of feeling is that it was the end of the month. Okay, so coming to the Friday, all the markets ramped up into the end of the month, and now we've got the start of a new week and the start of a new month. The actual markets, so the Asian markets have actually opened down. So that's the SPY that I'm looking at, and the Nikkei. The Hang Seng hasn't opened yet. That'll open up in probably about 45 minutes or so. But the SPY and the Nikkei have actually opened a lot weaker where they closed on Friday and flushed even lower than that. So maybe it's kind of that, like I said, end of the month window dressing. A lot of the fundies like to pump it up just to, to make their books look a bit better. The performances look little bit better, and it finishes off the month with really a good week. Good finish. So what we can see here, we've got the S&P 500. You can see that the markets, that's just the S&P. We'll look at the others. They've actually bounced quite well. Okay, you've got to not forget that they are still in a downtrend. You can see. We'll look at the daily charts. Not going to worry too much about the weekly, but you can see that they've been in a nice downtrend. Your key level here, key lower high here. We've got a key level at 41.65. That's on the big S&P. Now, I wasn't really going to look at the big S&P because it's basically driven by the Nasdaq. So we'll put it more focus into the Nasdaq and the Dow in the US. But it has, held up quite nice. A little inside level here at 37.42, drove it high. You can see the momentum sort of charging back up again. But whether we do something like this, momentum gets to that zero line, starts to fade. That's what I'll be keeping an eye on. So it's really that key level, keep an eye on at the moment at 41.65. So over to, we'll actually do the Nasdaq while we're talking about this. Now the Nasdaq is much the same. This is what I'm kind of looking for longer term, although it's got that longer term. The reason why I'm looking at that longer term is more because of what's happening with interest rates and Powell and everyone like that. So the markets have actually bounced quite hard because they were talking about the rates of inflation getting under control, okay, or getting easing back, and the rates of the pace of rate rises slowing down because the economic growth is getting under control. But everything's looking like it's falling into place with regards to risk on into what do you call it, into risk assets, okay, into shares basically. And when we're talking about the market, this is what was happening last week, potentially going to a low interest rate environment again, because we're talking about inflation getting under control, rate rises slowing or stopping, and then down the track we're going to go into rate cuts. That's what the market's potentially thinking now. If we go into rate cuts, that means we're going back to that low interest rate environment, which is going for your growth stocks again, so your tech stocks and things like that. That's why we're seeing the Nasdaq sort of pop up quite hard, which is dragging the S&P up as well. So at the moment, we're hanging around the resistance zone at 12,885. We'll wait and see what happens tonight. Maybe we're going to pop up, have a bit of a pullback. So I'd ideally be looking for a pullback and then looking longer term to get in. So that's not going to happen over the period of a couple of days. It's going to be weeks ahead. Now, if inflation doesn't get under control, which there is a chance that they're going to, the Fed is going to lag the curve in the way they're going to come late to the party in interest rate rises. They can't get inflation under control. If the market starts feeling that, then we're going to be talking up, the market's going to go lower, okay, because inflation is still the key. It's going to crimp growth, all that sort of thing. But if they can get it under control, the market's probably going to start to get buoyed a bit. And I think, that coupled be with the end of the month too has provided some support into, overall markets at the moment. Okay, over to the Dow. Dow's much the same. It's just gone through this level at 32,550. It's still in a downtrend, both the Nasdaq as well. It's still in a downtrend. All markets are really at the moment. It's just had a nice little bounce off that. It's not a major level at 29,400. It's sort of just a level backed off, broke through, retested slightly, and then went up to new all-time highs. It's just pushing into that zone now, 29,400. Now the good thing for bulls is that it has been sort of a gradual move down. It's not a major sell-off like we saw in the COVID, the COVID sell-off we saw previously. This big sharp move down. It wasn't like that. It's more controlled. Okay, so it's actually doing a bit better. But realistically, that could be a nature of the overall rate rising cycle. Like I said, it's gradually coming down until they start to find a base, because we're not talking up massive rate rises like coming into the GFC. There has been some rate rises that's going to get under control, but there's high inflation levels they're trying to get under control. All right, so if that looks like it's actually they're getting there, they're doing the right thing. There's still debatable at the moment. Then I would suggest that we found a base at 29,400 longer term. It's just a matter of, I don't like these V-shaped recoveries. I wouldn't be buying here because I think that's extended. And I can't see it just coming all the way straight back up to here, one foul swoop, but you never know. Okay. I'd ideally looking for a pullback. What happens on daily, maybe taking something off the daily charts, but longer term on the weekly, I'd rather see a deeper pullback to build more of a base to work from. So at the moment, the trend is still down. Over to European markets, we've got the DAX, much the same, big flush down, pop up, and we pushed down to this level, found a double bottom, or I call it a retest fail, 12,505. Now we're into another level at 13,480, which is kind of a key tonight. We'll see how that goes. End of month, if it was end of month, window dressing, a bit of an unwind like we're seeing in Europe, Asian markets at the moment could be a bit of an unwind, and this market starts to back off tonight. We get some unwind of these longs that built it up to 13,480. Okay, but we'll have to wait and see what Europe does. What they're happy to kick on higher or down. They've got problems with obviously energy problems, which is going to be even tighter. So I think the tighter the energy problems, more that's going to crimp on everything. Okay, which means it's going to, inflation is not going to be a problem too much over there, or potentially, well, sorry, I think it's reversed really. For energy prices going to go up, which would mean that inflation is you're not going to get it under control with the rate rises, which is going to crimp on growth. So I think Europe really should be, I would expect to be way down in the near future. Okay, looking at the FTSE, that's been a lot better. It's been up here. It's been a nice little sell off here, big run up. This level it's traded through quite a few times, 76.60. Okay, faded off there, faded off there, faded off there again. We've gone through. We've sort of broken this uptrend, but it's not. The fact that it's found support at that 7,005 area on the daily basis. It doesn't, and then we broke up through that 73.40. So that was the anchor to this down move. If that was first leg, secondly, we should have gone through there. The fact is we held it, broke the anchor to the upside. Okay, and we're just pushing above that level now. It could just fade that level. We might find that it's just flushed it out, trap some longs, and then we're going to turn around and dump on them. I don't know just yet, but it is, it's, I wouldn't want to be biased up or down. I wouldn't want to be biased up because we've broken this sort of uptrend here. We could go consolidation sideways. I wouldn't want to be biased down because we're holding this 70,005 area. So, it's each way bet at the moment. We'll have to wait and see how that plays out. Over to Asia now. The XJO, you can see that that's, had a good sell-off the highs at 76.25. Big move down. Bounced off that 69.65. We've got a lower high coming to play and just smashed through that level. Really flushed out a lot of these longs. Okay, from previously. We're on a daily chart, so that's really this longer term. I've got this more of a channel. That's a big blast through it over COVID, the pandemic sell-off. And it's bounced back, started to hold within that channel again, and it's still continuing up. Maybe we got to the bottom end of that channel, or roughly to the bottom end of that channel down here, and we're bouncing. I think we're at a key level at the moment, 69.65, whether we're going to hold this zone and start to sell off from here, or are we going to start, continue to climb back up again and potentially trade right up to these all-time highs. At the moment, that downtrend for me is broken. It's just, what are we going to do from here? Are we going to go start to roll? Are we going to contract further up? This could be more of a complex correction back up again of this downtrend, or we're going to start to, really start to slam back down again. Okay, so for me, the short-term trend is up. It's obviously on the daily basis, we've been moving up off this level around 65.39. We pressed it into 69.65. It's whether or not the bulls have got enough momentum to continue on up. And like I said, when you're talking up an interest rate rising environment, it's kind of hard to see that this could go back up to all-time highs. Okay, maybe it's going to be a bigger delayed effect to economic slowdown. That's what they're talking about in the US. This economic slowdown everyone's talking about because of the rate rises hasn't filtered through yet. We're still getting some good earnings. Amazon and I can't remember who else it was come out with some good earnings, and a couple of oil companies good earnings. Now that obviously hasn't flowed through. Okay, that's from previously. Okay, so probably the end of this year, start of next year, we're going to start to really see economic growth slow, which would mean that wonder where the market's going to be at that time. But it's sooner or later, the higher it goes for me here, it's going to be way down. Where we're looking forward. All right, so yeah, just have to wait and see how those numbers come out. So I think it's really a matter of keeping an eye on those economic data that comes out over the next few months. Okay, Hang Seng. Now the Hang Seng's not looking too crash hot. That's on the actual CFD prices. If you go and look at that, it was heading down on Friday when the markets were going up, so it was pushing into support. Okay, now this is, you've got this big downtrend from that offer zone up at 13,255. It's pressed down to 18,555. Okay, they've got obviously their big problems with their housing market and debt and all that. They're trying to hide a bit, obviously, as you would do, I guess. But the banks, a bit of a run on the banks. People are trying to take out cash, being forcibly stopped from taking out cash at the banks to stop a bit of a run on the banks. But either way, that's created that bit of turmoil, and the pressure is definitely down on that, on the Hang Seng. It's got a big level here at 22,430. We've got this minor lower high that's in place at the moment on the daily charts at 29.95. Okay, keeping the pressure on. So whether we just continue this down into 18,555 or not, or whether we start to find just a minor level is just in here to hold up. Okay, a lot of the time the market will look like it's heading south and trap some traders. Okay, trap them on the downside, ramp back up again, and then trap them on the upside and ramp back down. Okay, so it can be choppy. It's just wary to know exactly where your levels are. So the Hang Seng at the moment, trend down. I like this kind of the shoulder trade. I like that for expansion further to the downside. Okay, Nikkei, a lot more choppier than the others. But all in all, we've got trend up, sideways action, big flush. It got tested into this zone. What was that zone? 24,260, 1, 2, 3. And it had a bit, the first time it backed off there, come and retested and failed, took out this low, all the way back up again, failed. So it had to have a deeper pullback. And obviously, granted, that's over the pandemic sell-off, which I think it is, yep, over the pandemic sell-off. So it probably took out these lows, which it may not have done that if there wasn't, any of this sort of fear driving the market lower. But either way, it drove through that and it's bounced straight back up again. Now it took off, went straight through this level without even looking back. So we didn't get a retest back into the zone. It was just straight up from here all the way to 36.80. So maybe we're getting the same sort of action as we saw previously, or we might be, roughly about here where we consolidated between 28,360 and 25,595. So for now, I think it's really, it's sort of ranging between these two levels. If we break up through, I'd ideally look for a bit of a pullback and see if we can hold that 28,360 for a move up to 36.80 and potentially through. Otherwise, if it comes up through that zone, just pushes up and straight back down below, I'll be looking to trade short off that area. Okay, but for now, we're sort of pushing up into that zone. All right, over to some currencies now. We'll just click over to the 30-minute charts. And you can see that that's the daily, that's the US dollar. It's up, trending up on a daily basis. It's what's going to happen. Okay, everyone's factoring in higher interest rates in the US. It did sort of bounce off that area at 105.70, that support zone. We just get that. You can see through here, it was resistance here, backed off, come back up and through, resistance, then blast up and through, and now it's providing some support. So whether we flush that level, we bounce straight off that zone, whether we're coming back into retest and we start to lift back off there again, is yet to be seen. I feel that this move down is because of what's happening with interest rates in what the Fed was saying. They were expecting that they probably, inflation has peaked, meaning anyone with the US dollar is banked on higher inflation levels, higher interest rates. It's probably peaked, and that's why you're getting a bit of an unwind from these highs, an unwind of long dollar bets. Okay, so really, it's where are we going to unwind to? The fact that I think what we're looking for now is if inflation is not under control, okay, you probably find that the dollar will pick back up again. That's what I'll be expecting. If the data is suggesting that there's an economic slowdown, then there's no need for more rate rises, then we'll probably get further a dollar unwind. So really the key in the short term for me is that 105.70 area. Okay, what does this mean to the euro? You can see euro for me has been consolidating range bound between that 102.70 and 101.22. Okay, we had a big sell-off here as the US dollars rallied, US dollars falling away, and we got this big bounce back into it. So it's basically correlated in the opposite direction with the euro. If they start talking up rate rises in the euro, you'll find that obviously it might get a bit of a kick on up through 102.70. And that could be the case, we were talking about before with higher energy prices, higher cost of energy, pretty much is going to help lift inflation or, keep inflation at least higher or push it higher, which would mean that there's going to be talking up of more interest rate rises, which would mean that the euro would get bought up compared to the US dollar. Okay, especially if you'd probably peaked, you're talking about peak interest rates or in peak inflation in the US dollar, so you're probably peaking on the US dollar. And now there's a chance that could be unwinding to the US dollar, buying the euro for that currency. What is it called? Currency yield. Okay, you get more yield, or there's a better play when US dollars flow over to the euro. But we'll wait and see. For me, it's still range bound between those two levels. Really, probably depending on what US dollar breaks through that support 105.70 we said. Then look for the euro to pick up through 102.70. If not, then look for it to test back down to 102.22. Now the pound. Pound has, it's lifted. It's been trending up recently. Your big sell-off here, trending back up again. So really, it's pushing into that 121.98 zone. I think it's not a key level, but it has traded there before. 1, 2, broke up and through it, retested into it a few times before it broke down, retested from below again and again before it was heading down here. Now we're back up into that zone. We flushed it straight back down again to 102.63. So I think for me, these are the two key levels: 120.63 and 121.98. All right, so I just want to wait and see if we start to back off from this level. I'll be looking for a lower high, sell back down to this zone. Okay, if we start to press through it, I'll be looking for that retest to hold for a move up to 123.18. Okay, Aussie dollar. Aussie dollar, much the same. It's found a nice little, flush into that support down there at, was it 69.12? And then we've got sort of another key level I've got here marked up at 170.43. And this is more of a daily support, which is broken at 169.80. So really it's these two levels I'm looking at. If this holds, which is the anchor to the uptrend, then expect some consolidation and potentially work off a higher low to get up through 70.43. If not, we're starting to, way down on this becomes a lower high. Then I'll be looking for that, lower highs to press back down into 69.12, potentially break through that level. Okay, over the US yen, I think that's a good play longer term. And I'm going to get over to the 4-hourly chart here, just one moment. Now, this is what I posted a while ago to our group. It's been trending higher, and you've got obviously the BOJ was talking about that 130 area has been in that kind of line in the sand. Now they let it go, got up to 137.38, even higher than that before we start to fade. Now, if that US dollar, I think, is starting to unwind, potentially it doesn't have to be the US dollar to unwind. It's more the shorts into the yen that could turn to unwind. Okay, your short yen have to buy it back. That's pressuring the yen higher as a pair, pressuring it down. Okay, so that's what I'll be looking for here on the 4-hourly chart. I want to see a bit of a pop back up and to retest this. Whether that's a retest and we're failing now, you want to be going down to your lower levels. I'd rather see some consolidation into this low, a pop back up to 135, and then a key lower high, quite a clear, something like this. A few candles that have been grinding back up, and then you get that failure rather than just straight down again. Okay, so, but either way, I think this is heading south. Okay, we'll just get over to gold, and we'll do quickly oil and copper, and we'll finish up there. So gold over the daily here. This is something we also posted a bit of a bounce into gold. It's probably not the the cleverest, well, a bit of an obvious trade. I think key support zone here. We're bouncing off that support zone at 1682, looking for that high low. Played out quite nicely, just up a bit higher around that 1728 zone. It looks like we're heading to 1785 at the moment. Okay, on the daily charts anyway, before we start to get potentially some profit taken from these longs. But either way, I think longer term that daily is under pressure a bit more. Okay, so just be wary of gold. Over to oil. Oil is, get to the 30-minute charts. I think it's clear on the 30-minute chart. You've got some key support zones. We've got marked up here at 93.26 and then 95.34. That's just an inside level at 95.34. The key level is really that 93.26 area. This inside level is starting to lift up, and we've broken this longer-term downtrend. You can see that. This downtrend here, we're starting to break that, and we're starting to be basing through here. So whether we start to hold higher lows again, I don't like the way that's it's spiked up here and just flushed straight back down again. But either way, it is holding some higher lows. So I'll be looking to see if this pullback can hold. We start to lift back up again and work off some really short-term high lows. Okay, but that's it for oil for me. I think it's we're probably going to start to work our way back up again. We just have to wait and see. But if we're talking up, inflation under control, economic growth starts to slow. Economic growth slowing could probably weigh on oil a bit further, so we might just turn around and head straight back down into that support zone. Okay, but for now, if inflation sort of holds up there and economic growth is good, is still fairly robust, then oil I think would just be ticking higher. Okay, over to copper, just to finish off with. Copper's just been grinding its way up. Let me just get that a better chart here. There we go. So 30-minute chart there. Copper has just been grinding its way up off this support zone at 327.75. This support zone through here, holding higher levels. It is getting a bit stretched on this 30-minute chart anyway, but either way, it's still continuing to hold these high lows. Now, that is a corrective move of that downtrend more than anything else. It's not a new uptrend. If it's going to be a new uptrend, I'd rather see a big flush down and hold a key higher low on like a daily chart or something like that. But if you go over to the daily chart, just take a look at that. You can see that has been been belted from that 456.80 zone all the way down to 327.75. We're reacting back up, just squeezing a few of these shorts out. So on the daily chart, if I think it's going to be more of an uptrend, a change of tune, and be start of a new uptrend, I want to see it retesting that zone, hold a higher level, and then go. Okay, then you'll be looking for a daily basis to work back up to to this area 440.75 or even further. Okay, that's pretty much all I wanted to cover, guys. We've got our key levels there, a bit of an overview of the markets. US dollar, we've spoken about everything there, so it's giving you enough to look at, to keep an eye on. Some key levels on if you're a share trader, currency trader, or you're looking at commodities. There you go. There's enough information there. But either way, I think we're still in that area where it's a bit choppy. and everyone's trying to decide what's going on, risk on or risk off. All right, guys, thank you very much for joining me, and we'll speak to you again soon. Cheers, bye.